Analysts expect the Central Bank of Kenya to slash base interest rates by as much as 3 percentage points by end of the year to reboot the softening economy in a setting of relatively stable inflation and foreign exchange markets. CBK's top decision-making organ, the Monetary Policy Committee, will hold the first meeting of this year, this Wednesday next week, on the back of a bigger-than-expected 75 basis point cut in benchmark lending rate to 11.25% during the last meeting early last December. NTV's Brian George Otieno explains.
Financial analysts and economists preempt the Monetary Policy Committee will reduce interest rates in the upcoming rates review in its first meeting this year. The move is aimed at attracting more borrowers as an unfavorable monetary policy created borrower apathy. Commercial banks responded to CBK's signal by trimming average borrowing costs 33 basis points to 16.89% in December from 17.22% in the prior month, which was an 8-year high. Analysts from 5 of the world's leading banks, consultancies and think tanks say there is room for further cutting in the policy rate this year, predicting a drop of between 1.25% and 3.0% this year. The Central Bank of Kenya aimed to stimulate the economy amid low fuel inflation, a stable shilling, and a healthy harvest, curbing food prices pressures when it lowered the signal rate by 75 basis points last December. Cutting the key central bank rate is expected to lower the cost of borrowing as commercial lenders use it as a base onto which they load their margins and risk profile of individuals while pricing loans. However, banks also watch the movements in Treasury bills rate closely as they consider it risk-free. Resultant drop in cost of loans are expected to prompt businesses and households to borrow cash for investments and consumption, boosting economic activities. New York headquartered Fitch Solutions, a market analytics firm, sees the MPC slashing the policy rate by largest rate of 3% points by year-end to 8.25%. Goldman Sachs, a leading global investment bank, expects the rates to close the year at 8.50%, signaling a 2.75% point reduction, while London-based Capital Economics projects a 1.75% drop. Analysts at Citigroup Global Markets expect the MPC, which usually meets after every 2 months, to cut the policy rate by 1.5 percentage points this year, while counterparts at Standard Chartered see a modest 1.25 percentage point cut. Brian George Otieno, NTV, Nairobi.